Thank you very much for that. By the way, October mutual fund data, the equity inflows have dropped from almost 30,000. It's come down to 25,000, sub 25,000. That's the number, 24,671, which compares with 30,400. So on a month-on-month basis, the net equity inflow has moderated. Mid-caps have seen a bit of a drop. So from 5,000 crore of inflow the prior month in September, it's come down to 3,800. We'll await this. Do we have the small cap and large cap number?
The large cap numbers are also down on a month-on-month basis. The large cap number was just flashing on your screens a few minutes ago. The total AUM, that has seen an increase on a month-on-month basis. But the net equity inflow has seen a decline. That the large cap fund inflow is now at 972 compared to 2319. So that's a big drop that you have seen. So the large cap fund inflow has more than halved compared to last month. The small cap fund inflow, it's a marginal drop, but still a drop of almost 1,000 crores from last month. And the mid cap funds too has seen a drop in inflows from 5,000 crores to just 3,800 crores.
You know, there's one, sorry, go ahead.
Go on.
There's just one point. The moderation that we've seen, this is the third consecutive month of moderation. In the month of July, the total net equity inflows were 42,700 crore rupees. In August, it came down to 33,400. In September, further moderated to 30,400, and this time it's declined to 24,671, which means from a high of 42,600 in the month of July, the net equity inflows have moderated by nearly, that's the picture that we should put up. So this volatility that we've seen in the market has resulted in some weakness in the equity inflows. And the IPO markets, not to forget that. Yeah.
Yes, and there's Anthony Heredia of Mahindra Manulife is joining in. Anthony, thank you for joining in. Third straight month of declines, but compared to prior months, this decline is appearing to be pretty substantial. Would you still be worried, or would you still look at it as a glass half full, saying that, oh, you're still getting inflows of 25,000 crores every month despite the markets having gone nowhere?
So, hi. No, I would clearly take a glass half full view just for a couple of reasons. One, and I think Reema correctly pointed out that while net flows have dropped consecutively since July, you'll find that gross flows are pretty consistent around the 65,000 mark, which basically means that as markets have been volatile, as they've been range bound, there are people who are taking money off the table, booking profits, and so the redemption numbers are marginally higher. That's why the net flows drop. The second I would point out is there is a reallocation in a sense of investor interest from, I would say, just normal traditional equity to products within hybrid like multi-asset as well as gold ETFs, right? So if you get all of that in aggregate, the drop is not as stark. The final point I would make is, frankly, as we saw gold and silver prices, I would say, retrace some bit of normalcy in the second half of October, at least I have seen flows in the industry come back to pretty much July, August terms, at least in November. So given all of that, I wouldn't be worried. I think, 25, 30, 35, these are all sometimes function of current market situations. You also know there have been a number of IPOs, so liquidity gets sucked out to that as well. So I wouldn't see any cause for worry, but clearly I would point out that products like multi-asset, especially since they're the only products in our product portfolios that have a gold and silver exposure, clearly seeing much larger interest relative to what they were 3 and 6 months ago.
Got that. So money is chasing multi-asset funds, gold funds, etc. Anthony, generally money chases returns, and returns have been muted. And now especially return expectations have been moderated a lot. Everyone's been saying that don't expect the kind of returns that you got in the COVID heydays. So do you think there could be this drop that we're seeing in the net equity inflows over the last couple of months is here to stay now?
I would say that these numbers or this range of numbers is here to stay for, I would believe, this quarter and the next quarter. For us to see a uptick from here, I don't think it's a function of people's return expectation, because I would just point out that, and that probably speaks to what you just said, The interest in multi-asset funds are also a reflection that they are the category of funds that still have close to double-digit returns over the last 1 year, relative to equity funds being close to negative or zero, right? So there is money influenced by recency of returns that's going to multi-asset. But I would say flows, to my mind, stabilize at around 25,000 odd crores to 30,000 crores. SIP flows remain stable, continue to grow. But for us to go back to the 45,000, I think we'll need some triggers which are market-related triggers for that to happen. And as you would know, those are impossible to predict in terms of when they will happen. But I would say the clarity around the tariffs front, probably the trade that's happening into emerging market equity, but India not being a beneficiary, starting to include India. Stuff like that, I think, will bring us back to the heydays of 45,000. Till that point, my personal view is we would expect to be at 25-30, and the lower return expectation is not really a factor in it.
Let's also get in Sandeep Bagla of Trust Mutual Fund. Sandeep, thank you for joining in. Would you concur with Anthony of taking this glass half full view despite numbers declining for the third month in a row, and the fact that the IPO pipeline is not drying up anytime soon? You still have bigger IPOs coming in the next 6 to 7 months. So do you believe that this number continues to remain around that 20-25,000 crore mark, and we should consider this to be the normal at least for the next few months?
Hi, good morning. So see, I have a slightly different take on this. See, we have to divide the data of inflows into two parts, the SIP parts and the non-SIP parts. SIP is the true reflection of the retail participation, and that has been steadily increasing, which is the effort of mutual fund industry and distributors. And that is steady at 29,500 crores, and it is increasing, slight increase. The other is the part where the large HNI investors, keep moving money from whatever has performed in the recent past, and that money will keep moving from, NFOs, IPOs, gold, silver, whatever is working, real estate. That is something which is non-core to the mutual fund inflows, and I have been saying this repeatedly. That if you look at July, I think. It was mentioned that there was 42,000 crores of inflows. That was because there were a lot of NFOs in that period, and a lot of this money comes in because the whole mutual fund machinery starts mobilizing money in a very concentrated effort. Last month, there were very few NFOs. There was one FlexiCap NFO of 1,700 crores, which is why the FlexiCap numbers have gone up. So I think whenever we are dissecting or analyzing about the mutual fund inflows, I think we should concentrate on the SIP flows, which are very, very steady. The rest of it is non-core, and it will keep moving around. And so I am not really worried about these numbers. The HNI numbers will keep fluctuating from time to time. That is the non-core part of our flows. So the core is very much steady. It's on the increase. So it's absolutely stable in my mind.
Gentlemen, thank you for sparing time and joining us today to decode the numbers from the mutual fund industry for the month. And we'll discuss more on this going forward during the course of the day as well. Take a short break, more on the markets on the other side.